Good morning, friends. Today we are going to start from chapter number second of our central banking optional series. So many days over, I have not made video. Today we'll start. So second chapter is all about the function of central bank. This is second chapter name, function of central bank. Okay. So first function is banker to government. What is meant by banker to government? It is just that it is a bank which is representing a government or which is doing the government work on behalf of government only. So what exactly the central bank is doing work for the government? Especially in our case only we will discuss. Same is the case with the all other economies also. So our central bank is RBI. So what RBI is doing for the government? So main function is that the deficit financing, that is the whenever government is incurring any deficit, that is if expenditure of the government is more than the receipt of the government, then that gap will create, and that gap, that deficit will be financed by the RBI. So deficit financing is the first function of the as a banker to government is the first function. Second point is that RBI will act as a banker to not only central government but also to state government also. On the basis of agreement by the state government with the RBI, RBI will do that monetary related work for the state government. Except I think for Jammu Kashmir, Puducherry and Sikkim. With Sikkim also, RBI has done some agreement I think. But for these three states, RBI will not do that monetary work. The rest of the state RBI will do work. So what will case in case of the central government? We cannot say central government actually. As per the constitution, it is a union of government. I think it is in the article 1 of the constitution. We will not say central government. It is a union of states actually. But people, so many candidates will get confused why union government I am using. So appropriate word is only union government only, but for a sake of understanding purpose, I will use central government and state government. So you know that that as per constitution, consolidated fund of India, then contingency fund of India, like this fund is there. Out of that fund, if expenditure need to be done, means that legislature permission is required. So what that fund is, that account is maintained with the RBI only, and whenever expenditure from that fund for consolidated fund of India, consolidated fund of state, that development purpose, that expenditure will be done whenever that is required. Like the whatever receipt is coming, what expenditure through is done through these accounts will be handled by RBI only. Then for the state government also same. Then contingency fund of India is for the emergency purpose, like calamity will become. For that purpose expenditure is required, that is maintained by the RBI only. Then government account department account is maintained with the RBI only. So whatever surplus is, that is government will receive through their investment, if cash surplus they will receive, means that will be deposited in the account which is maintained with the RBI. Actually in RBI one department is there for government accounts, and separate department is there. That department we will study in the next module I think. That department will be there. So government department, like that one department will be there in RBI, that will take care of the all the work regarding government. The department only will handle. So now what is written in our first point is that here you can underline budgetary deficit, scenario or inflation tax, and crowding out effect. These three terms I will explain. No? This is I think conceptual part. You need to understand it clearly, because this portion will get repeated in every chapter. So what exactly the concept I will tell you later on. No need to repeat it. You will understand it and you will understand the thing easily. So what is budget? I told you that other than that, one more thing is that remittance of the government, then public debt management. If government is borrowing from our country, then that management also, if doing from foreign country like external commercial borrowing, that is also managed by the RBI only, because simple is that government does not have any expertise in that case. So RBI, so government has appointed a separate financial agency like RBI to manage it. So during World War case also, you can think that the so many private banks were there, but government was needing one central bank that will do the work of mainly government. That is like printing of notes, then public debt management, then inflation control, price stability. These were the issue that government cannot handle. So separate financial agency was required. So at that time, many private banks were nationalized and they were converted to central bank also, and they have made subordinate to government. They have made subordinate to government, means government stake was there in that bank because they were nationalized, and government was ordering to the bank what are their function, what they need to do. So central bank was subordinate to government. So these things was there earlier. Why central bank actually came, origin of central bank. So why this one of the function was budgetary deficit financing. What actually the function of the government actually, you know that the socio-economic development of the development of the country is the important function of the government. So what for that purpose the government need actually money, and how government will earn the money in the economy through taxes, fees. Through this purpose, through this way they will receive their receipts. So and whatever the expenditure will be on the public health infrastructure, then roads, then you can think about the then educational infrastructure, etc., etc. This is like a productive work expenditure government will do. For that purpose government will need money. And many times in emerging economies like India and other economies, definitely government has more role to play. So government expenditure will always be more than the government receipt. So government will incur the fiscal deficit. This concept you may have learned in ABM, fiscal deficit concept. That question was also asked in I know that in June 2022 exam. Question was one numerical was asked on fiscal deficit. I will that explain you our central bank series only. We are explaining for central bank series only. So here I will not explain, one separate video I will made on analysis of the CAIB exam. How you need to study for the ABM, BFM, and optional like central bank. I was very much close to this exam, so that's why I know it. Uh, so that numerical also I will explain what numerical they have asked, how that we have to solve that one. So here only we have what our terminology, what is required is fiscal deficit. So government will incur the fiscal deficit because expenditure will be more than the receipt. So what then when that additional money will come, from where it will come? RBI will finance that additional money. So RBI will print money, that is called monetization of the deficit. So RBI will provide that money to government, and this will create inflationary pressure in the economy. What the government will do? Government will place their treasury bill or security with the RBI. In against it, RBI will print money and give to government. But what because of that additional money has been created in the economy, that will increase the base money. Base money definitely. So what RBI will do? Because of printing of money like this, it will create inflationary pressure on the economy. RBI, one of the function also important function is the monetary policy function. So to avoid that inflationary pressure, on one hand RBI will try to suck out that liquidity which has been created by the RBI by printing money. On one way it will give liquidity to government, on other way, on second hand, it will try to suck out that liquidity from the market so as to balance the money supply in the economy. Okay. So first point is that the senior inflation tax. What is that? If RBI is printing money against the what treasury bill or security paper given to RBI, that extra money created in the economy, that will create the inflationary pressure in the economy. That's why it is called as the inflation tax or seigniorage. So you remember this one, additional money I have written here. Additional money creation is nothing but the seigniorage or inflation tax. No need to go through each and every word. What I am telling, that is important. You just listen it. You will easily sail through the exam. I will sure. That is, I am 100% sure. Whatever may be the difficulty of the exam, you will score 50 plus only. And that depend upon your ability. You can score 70, 80 also. So seniorage inflation tax we have now crowding out effect. So what I will told, that RBI now additional money has been created in the economy. On the one hand, on the other hand, RBI will try to suck out that liquidity from the market. So how RBI will try to suck out that liquidity? RBI will do? RBI will try to sell these securities or treasury bills in the market to suck out the liquidity from the market. RBI try to sell this one. So what will happen? RBI has to understand the economic scenario first, that whether these securities or treasury bill will get absorbed in the economy, and who will absorb this economy, who will be the market player in the economy. Commercial banks only, private player, commercial banks, corporate sector, they will only purchase this security and give them cash. Whichever cash they are having with them, they will give to RBI. Like this, RBI will suck out liquidity. So for these two condition will be there. First thing is that if for example, if RBI now through open market operation, RBI will bring this security and treasury bill in the market and try to sell it to commercial bank. Now public sector bank, what they will think now, for the concept of SLR. Under SLR, some portion of the SLR government banks has to keep in government securities on treasury bills. So definitely that portion will be subscribed by the public sector bank, and some private sector also they will purchase it. So in this way, whatever money in the economy was there, that will flown from public sector bank to RBI. Okay. Now because of this liquidity from the market, which can be utilized by the private sector or commercial bank for lending purpose, for lending purpose to productive sector of the economy, that will not be done, because now they don't have liquidity. They are already given to RBI only, so they will be short of that liquidity. So this will create a crowding of effect. Crowding of effect means sucking the liquidity from the market, and that will lead to crowding out effect, because there will be less cash available with the private player or commercial bank for lending to the productive sector of the economy. If they will not lend, means what will happen? They will not, common man or corporate sector will not get loan for their infrastructure project. It means the infrastructure project will not run. So in a way, it will hamper our economic development of the country also. So it has the implications. So that is why it is very much important to maintain a very delicate balance between the money supply and money sucking out, means liquidity we need to take out from the economy. That has to be balanced very carefully. It should not affect the overall economic cycle of the economy. Economic cycle of the economy, yes. So these three concepts I have explained. Why budgetary deficit, I explain you, like fiscal deficit. Then senior inflation, additional money which is created. Crowding of equipment, whatever liquidity was there in market, that was taken out by the RBI. So it will create a crowding of defect, means now private sector or commercial banks will not have liquidity. So because of that only, what is happening here, government is pressurizing the RBI to provide money to them for their own purpose, means that is only their socio-economic objective. But on the other hand, this thing also will get affected economic development of the country because of the crowding of effect. So that's why I have written here, the fiscal and monetary policy cooperation actually is required. Or otherwise, that debt management function will be there, that should be taken out from the RBI and should be given to the some private agency. That means that effort also was made during Arun Jaitley, when finance minister was there at that time. That was effort also done, but somehow it was remain in the backbencher only. That agency was not created. So banker to government, I have explained to you. Second point is banker to bank. So second point is banker to bank only. Why there should be always be one king is required for controlling the praja. Like that only central bank controlling the so many banks. What will happen if there nobody is there to regulating these many players? Chaos only will happen in the economy. Who will regulate the economy? So RBI will be there to controlling these banks. Why it is required? It's an important, I will tell concept here is that public money is there in bank. Whatever is maybe private bank or public sector bank, whose deposit it is a common man deposit. Common man money is there in that bank. So it is very much necessary to ensure a safety of fund, public fund. So that's why control over these private banks or public sector bank is required in the form of the regulation, supervision, that is required to ensure this public fund safety. Because second thing is that if a bank central bank will not regulate these banks, means what will happen? Unconditional, indiscriminate, I will tell, and reckless credit will be given by the banks without knowing the profile of the borrower, without their complying with the prudential requirement. Indiscriminate or reckless lending will be done. That should not happen, because bank is just not the purveyor of the money but also the creator of the money. Purveyor of money means just a medium for flowing that money. It's not just about it, but it's also creating money. How it is creating money? Bank is giving the loan against its deposit. Means if somebody is depositing their money in the form of the FD, that FD or CASA section deposit, bank will utilize that deposit only, for providing loan to anybody on the basis of the deposit only. For example, bank is giving working capital to somebody, so he will avail that working capital CC limit. Based on that, that will be utilized for his business purpose, and after that he will make whatever obligation that person is having to another person. For example, I am supplying goods to that person, means I am getting money from that person. I will deposit that money in my bank like SBI. For example, in SBI I am depositing. Based on that deposit, now SBI is giving credit. In this way, credit is getting created in the economy. That is, money is getting created in the economy, and there should be watch. There should be checks and balances on the creation of the money. For that purpose, regulation and supervision is required, so that undue credit creation in the system should not happen. Undue credit creation leads to instability in the financial system. Then second point is that lender of last resort function. Lender of last resort function. Why that is important? Lender of last resort, in first chapter also I explained, that is important, lender of last resort, because if any bank is in crisis situation, so somebody has to rescue them. They are solvency, they are having solvency, means they are having capability to come out of that situation, but at present they are in illiquid situation, they don't have liquidity. So RBI will provide them liquidity at the penalty interest rate to rescue them from this crisis situation. So in this I have explained that term, that lender of last resort term was coined by Baring but popularized by the Bagehot. This name is somewhat confusing, whatever you call. So it is coined by Baring but popularized by the Bagehot. Okay. So what he is telling, he implies that central bank should provide liquidity to solvent but illiquid bank. Solvency means they are in position to manage their liquidity, means they will come out of that crisis situation, but at present they don't have liquidity. So RBI will provide them liquidity at a higher interest rate to avoid their systemic risks and to prevent them from moral hazard. That moral hazard problem I told you in lender of last resort function in previous chapter. You can see that video and you can understand this concept, very simple concept. So third point is monetary policy function. What is a monetary policy function? Here I have written about monetary expansion. Now how monetary means money is created in the economy, that is net credit given to government, like I told, deficit financing, so which is you are printing money. Against foreign reserve means you are what central bank is doing, they will absorb dollar from the economy and they will put rupees in the economy, like there's a money supply will increase. Net credit to bank. Bank will RBI will provide money to banks in the form of bank rate, repo rate. They will lend money to commercial bank. Na? That was how, like this monetary expansion will happen in the economy. How base money or reserve money I have written here, or high powered money is equal to CRR plus cash with bank, is nothing but the base money. So if base money multiplier by money multiplier is equal to money supply in the market, will come to know. Question can be asked on this. For example, base money will be given and money multiplier will be given. Like base money will be, for example, I'm telling 100 rupees, money multiplier will be 2. So what is the money supply in the market will be 200. Like that. What is the monetary policy tools used by the RBI in the monetary policy function implementation is the CRR, open market operation, repo rate. Like these are the tools to control the actually the money supply in the economy. Monetary policy function nothing but it's nothing but to control money supply in the economy. It should not be go beyond stipulated level. It should not be below stipulated level. It should be stabilized like that. It is like that. Now supply and demand in the economy should be balanced like that. What is demand in the money? There is demand for the money in the economy, that much only supply, so that it will come to equilibrium. Like Keynesian economy, or you can say Keynesian concept, that is explained in ABM first module. You can read how supply and demand he has integrated that monetary concept in the real effects of the economy. He has explained how monetary policy is affecting the real economy. In that he has explained about that how demand for the money should be equivalent to supply, and it will reach to the equilibrium. Third point here is the monetary policy committee. I have written about it. So what is monetary policy committee now? I think in 2016 I have written here actually. Okay, I have written here monetary policy, which was formed in 2016 under RBI Act 1934. Its main work to fix repo rate for each quarter to control inflation and to keep in a band of 4 plus minus 2 until 31st March 2026. Any deviation available answerable to government. Team, how in monetary policy committee, how many members? 6 members will there. 3 from RBI and 3 from government, that will be nominated by the government. So this is the actually this in 2016 that monetary policy committee was established. That model we have taken, I think, from UK. In UK also same committee is there, whose main function is to monetary policy function, that is to control the money supply in the economy for controlling inflation in the economy and price stability. This committee is answerable to our legislature. What will happen? Every quarter, repo rate will be decided by this committee. How many members are? 6 members are in the committee. 3 from the RBI, 3 nominated by the government. Okay. So whatever repo rate they are deciding, they will put this bulletin or report of this monetary policy before legislature also and in public domain also, and everything will be written why they have taken this decision, what is the economic scenario at present, what will be the implication of their decision. Everything will be, they have to answer to legislature. In this way, transparency and accountability has been set through monetary policy committee. So its main function is to control the money supply in the economy so as to prevent inflation and to keep price stability. So this is a monetary policy function. Now you can see last point is a currency issue and management function. These are the function. First function we have discussed, the banker to government. Second function, banker to bank. Third function, monetary policy function. Fourth, we are issuing currency issue and management. What happened? UCA problem. This is a short form I have written. UCA problem was there. Why it was there? It was in 1870s to, you can think about the early initial period of the 20th century, like up to 19th century. You can think that UCA problem was there. UCA means uniformity, credibility and authenticity. Problem with the currency, because there were gold coins was there, silver coins was there, and some currency was there. You can think of so many countries are there and they are all are issuing their own currency. Nobody having you can think of an Indian scenario that all states are printing their own currency, nobody having uniformity. Means whose currency will you will think is credible, authentic. So URC problem was there. There was no uniformity. If everybody will print their own currency, which currency we should trade? So here I have written the central bank earlier printing their money again under gold, silver backing was there, but because of that no uniformity there. Because if you take your currency with some other country, they will issue gold coin, and in another country gold coins will not be there. Silver coin they will issue. That will not be acceptable, because if on a larger extent if gold is accepting, the people will hesitate to accept a silver coin, because other country has to accept that silver coin instead of goods. That problem was there in uniformity. So only one financial agency should be there that will print only single currency, and that should be acceptable. That was the main issue actually. That's why you can here one point is there that government of France, they have given this exclusive privilege because of this issue only. Exclusive privilege which was given to the Bank of France for printing money for 15 years. So this point is important. For 15 years of exclusive privilege was given because of this issue only. Then I have written one, monetary authority of Singapore does not perform note issuing function. At that time it was not issuing, it was not doing this function. So okay friends, we will consider this one as a part 1 of our chapter 2. So don't forget to like, share and subscribe our video, because subscription and like only give us or give me motivation to make next video. So actually don't forget it, and this is I am doing for you people only, so that you can cover central banking optional within a short span of time, so that you can maximum focus on your ABM and BFM paper. So don't forget to like, share and subscribe. Goodbye friends.